So things started getting interesting yesterday. We saw the S&P 500 fall pretty sharply. For the most part, you can see today we're trading around the flat line. We did manage to basically fill a gap around 58.60 or so. It looks like maybe CTAs are turning sellers here. You can see that by looking at the difference between the 20-day and the 120-day moving averages. I used the MACD for this to figure this out. I just changed the inputs. And then you can see that it's turned lower, which tells us that there's probably going to be some selling pressure in the market as we go through the next couple of days. But really what the key here is, and what we're waiting for, is some sort of sign that the credit market is really starting to get worried. And as of right now, at least, it's really not, we're not really seeing that quite yet, although there are signs that we are getting a little bit closer. You can see this is a CDX high yield credit spread index, and yesterday we managed to break above this downtrend that's been in place now for some time. So we're going to want to watch this to see if this is an indication that maybe credit spreads are going to start widening a little bit. We're really going to need to see follow through to kind of get any sort of sense that maybe something is changing in the marketplace. Once this credit spread starts to move, though, if it really starts to move and it has a continued move, that's really going to be your sign that something has mechanically changed in this market, and you're likely to see the selling pressure really begin to intensify. As of this moment, though, we're still in a really tight range here, and we're really not seeing the signs that the sell-off is going to really worsen. Right now, it just looks like we're probably feeling our way through this current environment, trying to figure out, what the next major moves are going to be in this marketplace. Because at this point, I think there's just a lot of uncertainty around policy, and obviously we've been getting a lot of signs that inflation has been kind of picking back up again, although you wouldn't know it by looking at 10-year rates, because 10-year rates have actually moved down quite a bit, and here's that big downtrend in the 10-year that we had identified and we had broken out above back here in late December. And for the most part right now, we're come back and we're testing that level, and we're going to have to find out whether or not that's going to hold. Obviously, if that level breaks, we have to maybe start rethinking where our long-term perspectives are going to be for the 10-year. But right now, I would also expect there to be some support around the 415 region. I thought the economy was going to continue to do well, and at the same time, I also thought that you were likely going to see inflation really start coming back. And for the most part, and we have really seen, inflation swaps move higher. Basically, this was a really big region of support in here. Going back to 2023, and clearly we were able to get above these levels for both the 1 and 2 year swaps, and it really tells you a lot about the direction and the trajectory of what the market thinks in terms of where inflation is headed. But at the same time, you've been seeing that detach from where the 10-year Treasury rate has been going, and so the big question is what's really going on here. And it could very well be the case that there is something else happening. You can see that the 10-year Treasury rate has kind of detached from where swap trading has been going. And I tend to think that a lot of that has to do with the direction of oil. But, again, we're watching all of these things as well. So right now, we're continuing to just keep an eye on the S&P. We're watching to see if credit spreads really start to move at this point. We haven't really seen that happen yet. Obviously, where NVIDIA goes is going to play a big role in how the market continues to develop. And more importantly, watching things like the HGX are important as well, because the HGX has really, which is the housing sector, has really weakened quite a bit over the last several weeks. And this has even come as Treasury rates have moved lower. And that really gives you a sense of what's going on here. The market really appears to be getting a little bit worried here. You can see on the HGX, this is a really important gauge to watch, just because it can sometimes be a really good leading proxy for where the overall health of the equity market is. Certainly in 2018, it was a real leading indicator of the slowdown that was happening at that point in time. It certainly served as a really good indicator that the market was going to be going sharply higher back here in the fall of 2023. And you can even see in this point in time as well, it led the market higher, and it's materially changed direction since October. And you can see now that the S&P 500 is starting to play catch up to what we've been seeing in the HGX. And so I think this is an important one to keep an eye out for. And additionally, overnight, we saw some real weakness in Japan. And Japan obviously down pretty big last night, breaking the falling by almost 3% and dropping all the way back down to 37,155. And that obviously also is a big indicator as well, because we know that for the most part this has been a big level of support for the Nikkei now for some time. And to be honest, the Nikkei has traded pretty well with and along with the NASDAQ over the last couple of years almost. And so basically this index stalling out has told us a lot about this rally also taking place in the NASDAQ, that maybe it wasn't really here to stay. And at this point, I think we just continue to need to watch the leaders of this marketplace, being NVIDIA, the primary one. And we spoke about it over the weekend, why I thought it was likely to trade lower. And for the most part, from that perspective, that has been the case. And I think, again, option positioning was just too bullish on the stock. As of right now, I think that's basically where we are. I'll have more over the weekend, obviously, and we'll take a look at what's coming up on the schedule for next week and try to figure out what that's going to mean for markets. Anyway, have a great Friday, and we'll see you again soon. Bye.